Good morning, all. Ira Epstein of Linn Associates with your morning flash update for this Thursday, the 21st of February, 2019, just after 9:20 a.m. Central Standard Time. Well, a down day in the stock markets, duh. Part of what's going on is you're seeing offers coming into bonds and notes as traders are thinking that the Fed statement wasn't quite as dovish as it might have been. The other part that is going on is that the U.S. and China, their lead negotiators, are now putting together today and tomorrow memorandums of understanding as to what's going on. You saw bids coming into the grains because China has offered to buy an additional $30 billion of U.S. agriculture products. Now, it could be a mixture in there of some chips and so on, but overall 30 billion more. And you know, what was the last numbers I have, the trade we did with them was around 24 billion in 2017. So if it were all agriculture, that'd be quite a number that they're picking up there. There are many issues still open, and I'm sure you know that. And of course, they're going to be around how do you check what they're doing with intellectual property, what rights do American companies have, the turning over of properties, those are all there. So we have to deal with that. Energy markets a bit stable today. The dollar's getting a slight bit out of this, and notice the metal market's getting hit pretty hard today. Is this the old buy the rumor, sell the fact as we get into these 2 days of negotiation with China, and suddenly what you're at is the market that has run up day after day, now that it's there for a deal or an extension of the deal is probably the likely outcome, the market goes the other way on it a bit. As for the day's activity itself in economic data, the jobless claims came in down 23,000. They were expected down 12,000. Durable goods came in up 1.2%, less than the expected 1.5%, although the durable goods ex transportations were up a tenth. My prior time was down 0.3. When you come here to durable goods ex defense, they were up 1.8%. So I don't think that's terrible. And they revised up November by 0.2. The Philly Fed Business Index, that was negative, down 4.1, expected plus 14, and the prior was 17. So while some of the other numbers pick up in little areas, overall I think it was a disappointing report. Now, as I said, China has said it would buy 30 billion of U.S. agriculture imports that would include corn, soybeans, and wheat. Market's not acting like that. It's over going crazy from this, and as I said, they bought 24.2 billion in through last 2017. At the same time, their own ministry is saying that China's mapping out plans to plant more soybeans. We know that they're buying from South America, the U.S. They don't have enough, so I don't consider that a bearish piece of news. What is bearish and surprised traders was one of the biggest exports that Australia makes is coal to China. And out of nowhere, 5 ports shut down coal imports from Australia. And it's said to be possibly in retaliation of Australia's ban on Chinese Huawei network and the ZTE for the 5G network they're building. They're not the only ones to do that. You've already seen pushback from the UK on the idea of barring Huawei, and the same thing going on with Germany. So when Australia jumped in, might have done something they regret now. IHS Markit reported that the composite PMI for the Eurozone rose to 51.4 from February's 51, but where the bad news is, that's a good number, is the manufacturing PMI hit a 68-month low of 49.2, with Germany's PMI, this is the powerhouse there, dropping to 47.6 from 49.7 in January. These are bad numbers, not seen in a long time. And as expected, like with our own Fed, the ECB profit rose by almost a quarter last year to 1.6 billion euros by the higher income from its bond portfolio that was buying from everyone. So as we can see, the market's under early pressure. Does that continue? Markets do get setbacks. You get that old buy the rumor, sell the fact, and you look to see what you can do with it. One of the things I look to see are if trends are staying in place is an indicator designed to tell you if that trend is staying in place, and it helps you by visually looking at it. comes in where you have a definition, and by the way, we put a couple of these videos for you as to how the indicator works so you can set it up. But it's got a green and a red line, and as you see these waves, as long as those waves stay in a very certain manner, it says that the trend of the market, even with the noise that's going on, the market is still trending. We teach you how to use this indicator. It's quite simple. It goes right on the bottom of your chart, and most charting services have it. We also have the pivot point indicator. You can call us. We'll send you out the links for this. You can go to our website. You'll see a carousel of free offers right on the beginning there, or you can click up here. Either way, another indicator for you to learn from. I'm Ira Epstein. You have yourselves a good trading day, and I'll see you at the end of the day with our end of the day videos.